Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Asian stocks and US futures fall after Donald Trump slaps a 25% tariff on all steel and aluminium imports. The US president also warns of levies on cars and chips. OpenAI says no thanks to Elon Musk, rebuffing a $97 billion offer for the company. We'll bring you reaction from the AI Action Summit in France, where the world's top AI players are gathering. Plus, hypercharged hearings for the Fed chair. Jay Powell heads to Capitol Hill to face questions on President Trump's policies on tariffs, banking regulation, diversity and more. A very good morning. Welcome to Tuesday, and checking in on these markets. Traders continuing to mull whether Donald Trump's bark is as bad as his bite. We do now have a date for when he's going to implement these new tariffs of 25% on steel and aluminium imports. He signed the order, so it seems that the threat is translating into action, and you are seeing that translating into a risk-off mood in markets. Futures lower on both sides of the pond. We await the testimony from Chair Powell later in Congress to tell us how the Fed is thinking about the tariff threats implications for inflation and therefore for the Fed. But we flipped the board over to the cross-asset picture. Japan's on holiday today, so you've no cash trade in treasuries, but gold inching towards $3,000 because of this risk-off mood, the flight to safe havens. We've got Brent trading at $76 a barrel. That's been boosted, I should say, by our Bloomberg scoop that the activist investor Elliott has taken a stake in BP. You've got the pound trading at $1.23, digesting these comments from Mann over at the Bank of England on why she decided to go from arch hawk to arch dove. We'll get into that later. And we've got Bitcoin trading just over $98,000 as it processes all of this. But we've got breaking earnings on the terminal out of Italy. Unicredit results for the fourth quarter coming in now. Net income at $1.97 billion, so a beat there on the estimate of 1.62 billion euros, I should say. And Unicredit's full year 2024 total distribution coming in at 9 billion euros. The estimate of I should say, for full year 2023 was 8.6 billion euros. And we're going to be speaking exclusively to the CEO of Unicredit, Andrea Orcel, tomorrow at 9 a.m. London time. Plenty to discuss, not least how he's been rubbing up with the governments in Berlin and Rome, of course, with his approaches for Banco BPM and Commerzbank. And a big focus, of course, on Unicredit's capital position. How is it balancing rewarding shareholders with all of this chasing deals? The shares up 22% year to date, so definitely one to be minding at the open. But let's get over to Asia now. Avril Hong's on standby in Singapore with a look at how Asia markets are reacting to these Trump tariffs. Avril, what's happening?
Yeah, Lizzie, I guess we're part of the risk-off as well. The tariff uncertainty, most of the region's stocks in negative territory. The Kospi TAIEX paired earlier gains, Chinese shares snapping a winning streak. But flip the board, I just wanted to highlight what's behind a lot of the price action today is that focus on the Chinese EV makers. We had a big event, a highly anticipated one in Shenzhen from BYD, and it unveiled that it's going to be offering a free smart driving systems across all its vehicles, what one analyst called a price cut without a price cut. So that's hitting its competitors. BYD stock rose as much as 4.5% earlier to an intraday record high. Pairing gains, it is overall in overbought levels. Flip the board again, because when it comes to tariffs, we talk about China, we talk about Japan a lot. So with that, I just highlight what we're seeing in India as well, because some of the analysts or economists from Morgan Stanley all the way to Nomura, they highlight the likes of Thailand and India as one of the most exposed when it comes to reciprocal tariffs from Trump, because if you look at the average tariffs from them to the US, they're higher than what the US imposes on them. And we've seen the rupee recently hitting record lows today, jumping by the highest in 2 years, and there's suspected a lot of intervention coming through from Indian authorities. So just thought I'd highlight as well what we're seeing there.
All right, Ava Hong in Singapore, thanks for breaking that down for us. But let's get back to the tariff story. President Trump ordering a 25% tariff on steel and aluminium imports, affecting all US imports, including from Canada and Mexico. Now, that levy is going to go into effect from March the 12th. Take a listen.
So essentially, we're putting on a 25% tariff without exception on all aluminum and all steel. And it's going to mean a lot of businesses are going to be opening in the United States.
And that's not it. He's warned there are going to be more trade barriers on the way, with cars and chips potentially the next targets. Let's get more now from our opening trade anchor, Kriti Gupta. Kriti, what do we know now about how these tariffs are going to apply and how they're going to interact with what's already there, the pre-existing tariffs?
Yeah, well, protectionism isn't new. It certainly isn't something that Donald Trump has invented. You heard it from April there talking about the effect on things like the Indian rupee, for example, especially in the light of COVID when we had that big commodity supply shock. You really did see a lot of these kind of exports from around the world kind of hit roadblocks in terms of how they're going to be exported because they wanted those supplies for their domestic audiences. This is just taking that to another level, these reciprocal tariffs. However, it's interesting that it's coming up on reciprocal tariffs because when he announced tariffs on Canada and Mexico, for example, both of those nations announced reciprocal tariffs, and that was not well received. So you can see how perhaps there are some bridges that are being burnt here. At the end of the day, you do have some of the EM countries that have the biggest exposure to the story, again, because of that commodity exposure and because of those critical minerals. The exception there might even be a little bit of China, just given that the levies are already much higher. Reciprocal tariffs actually bring that level down in theory.
OK, that's interesting. But then maybe we could get some exemptions. Australia being considered for exemption. Could there be other countries as well?
This is where that commodity-heavy exposure really comes in handy. Remember, Australia's economy is very exposed to what happens in China, for example. So not only are they major mining exporters as well, but they also have that second-hand kind of trade relationship and financial market relationship from China as well. That's perhaps why Australia could be actually exempted from it. If you're thinking about raw materials like copper, for example, or even steel, aluminum, critical resources, rare earths even, that you may not get from other sources, Australia could ultimately be that source. So that's one idea, but other sources would probably have a similar profile.
And then you mentioned yesterday about whether there were doubts about whether Trump and Putin had called. To me, it seems a bit like, you know, when they shake hands and who has to be on top. Yeah. But now doubts about whether Trump and Xi are talking as well. Yeah,
absolutely. And now he has made those comments before that there is going to be some sort of negotiation, some sort of conversation between the two leaders. We know there wasn't much dialogue between Xi Jinping and Joe Biden as well. Donald Trump even inviting Xi Jinping to the inauguration. He, in turn, sending his deputy, the vice president of China, instead. But he did tell Fox that there has been some sort of conversation. It's unclear when that happened or what that was actually regarding, but that the dialogue does exist, even as he is creating these levies on China and some of these export restrictions.
OK, opening trade anchor Kriti Gupta, who'll be back at the top of the next hour with her show as well. But let's get into how the tariff story is impacting the Fed. Fed Chair Jay Powell heading to Capitol Hill today, where he's going to face a barrage of questions on Trump's policies. We can get more now from Bloomberg's Valerie Teitel. Val, a hypercharged hearing. What are we expecting?
This is the first time that Fed Chair Powell will be sitting in front of the Senate since the re-election of President Donald Trump. He is going to release a statement at 3 p.m. London time, followed up by a few hours of some harsh grilling from the members of the Senate, from the Republicans and the Democrats. It's likely to focus mainly on the politics here, Lizzie. What does he think about the economic impacts of Trump policies? And what does he think about the average American who's having to deal with inflation above the Fed's 2% target for 4 years in a row? He also might get some questions on diversity dismantling. Is he following Trump's executive order to dismantle DEI within the Fed? And lastly, his thoughts on banking regulation. Does he agree with the push from the Trump administration for deregulation in the banking sector? Does he align with that drive from Trump administration? Lastly, Lizzie, I do want to point out he might get a different tone from the Democrats versus the Republicans. So we flip on and just look at how inflation expectations between the two parties have really diverged. The Democrats, for example, see a risk of resurgence in inflation in the next year, while Republicans don't really see that on the cards. He might get a very different tone when he's asked about the inflation impacts from tariffs from the Trump administration when it comes to Democrats versus Republicans. Watch out for that kind of divergence.
And indeed we will. Bloomberg's Valerie Teitel, we thank you. And let's go from the macro to the micro. The other thing exciting traders, of course, artificial intelligence. And OpenAI CEO Sam Altman has rebuffed an unsolicited $97 billion bid from a group of investors led by Elon Musk to buy the non-profit that controls the ChatGPT creator. Joining me now with the latest from Hong Kong is Bloomberg's Annabelle Drewlers. Annabelle, just how serious is this bid from Elon Musk? Can we kind of deduce his motivations in making it?
Yeah, it's difficult to understand how serious it was. Of course, Elon Musk is someone who has a record of acquisitions in the past, Twitter or X as it's now known, just being the latest. But this one itself, I mean, offering just under $100 billion, I mean, it's not even close to the possible valuation of OpenAI that's currently being discussed, which is somewhere around $300 billion, for instance, that could be in play right now. So, yes, I mean, the push that Elon Musk is making here is that he thinks it's time to return OpenAI to being an open source, what he would call a safety-focused company as well. I'm sure Sam Altman might say that's already the case for the business, but still, that's what Elon Musk is wanting. As I said, that valuation, it really falls short of what is sort of mooted today, which is around that $300 billion mark. That's the mark that SoftBank, for instance, could be looking to inject funds at that sort of valuation.
So that's what Musk wants, but could this actually throw a spanner in the works for OpenAI's plans for its transition to a for-profit company?
Yeah, I guess that kind of goes back to the motivation part, which I just nodded to there, but digging into more details on that, it maybe that is really what Elon Musk is trying to do here, which is to try and draw attention to this transition that OpenAI is trying to make, because we know, of course, OpenAI has followed a non-for-profit structure since its founding. This has been an issue within the company. We saw that sort of spilling into the public domain at the end of 2023 into 2024. Sam Altman is someone who wants to shift it into that for-profit structure. That sort of speaks to the feud that's been long-standing between Elon Musk and Sam Altman that has sort of taken place, because Elon Musk, of course, is one of the initial co-founders of OpenAI, but has since criticised it for essentially being too focused on the monetization of AI's potential.
All right, Bloomberg's Annabelle Drewlers, we thank you. I enjoyed that PS from Sam Altman. No thanks, but we'll buy X, a.k.a. Twitter, if you want. But no deal for now, it seems, when it comes to those companies. Coming up, though, oil and gas giant BP reports earnings later this morning. We're going to dive into what to watch and how pressure from activist investor Elliott may affect their strategic review. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. It's 6:15 a.m. in London, and we return to our Bloomberg scoop. The activist investor Elliott putting pressure on BP after building a significant stake in the company. Now, the oil and gas major is set to report its own earnings later today. Shareholders hoping that this new impetus by Elliott will deliver strategic transformation. And we can get more now from Will Kennedy, Bloomberg's senior executive editor for energy and commodities. Good morning, Will. Just take us through what investors are going to be focused on when BP's earnings drop this morning.
Morning, Lizzie. I think a lot of focus will be on the buybacks. Clearly, investors have demanded from all the oil majors big returns in the form of dividends and buybacks, but there is some concern with BP that its current rate of share buyback may prove unsustainable given a slightly softer oil price and declining refining margins, and they may have to pare it back a little bit. There's a view that they will probably try and get that bad news out today before their capital markets updates in 2 weeks' time. So it's going to be perhaps not a great set of earnings. It will be interesting to see how weak they are.
Of course, most of the oil majors have suffered from the deteriorating market. But as you say, BP's kind of been alone in being expected to slow the pace of share buybacks. Why has it been so much harder up than its peers, if you put it into context?
Its balance sheet is not quite as strong as some of its peers. It has slightly more debt to service than some of its peers. That goes back a long way, to some extent, to the period after the Deepwater Horizon disaster in 2010, where it had to spend billions compensating those harmed by that oil spill. And that means its balance sheet has never been quite as strong as some of its peers. So it's fighting a little harder to keep that share buyback pace going.
And do we know any more about this Elliott stake in BP? Is it obvious that Paul Singer would want to break up the company?
No, I don't think it's obvious that he would want to break up the company. Obviously, one of the reasons that oil majors work is because they're so tightly integrated up and down the vertical chain, trading, refining, production, etc. So breaking up these companies is not easy. He may want to do more work to separate the renewable bits of the business, but that's not a huge proportion yet of the company. And he's likely to want to refocus the strategy on core oil and gas and away from the new energy pivot that the current CEO and particularly his predecessor, Bernard Looney, had sketched out for the company.
And just finally, how can BP respond to Elliott?
Well, that's a good question. Those conversations are likely to be ongoing. I think Elliott will want to talk to the management team. I think BP was probably going in some of the direction that Elliott would have wanted. It's clear that the new CEO, Marie-Auchin does want to concentrate more on oil and gas production, to move away from some of those very aggressive decarbonisation targets that his predecessor, Bernard Looney, had set during the pandemic. It may be that Elliott is going to push him to go further and faster, maybe to hive off businesses more quickly. But I think it's sort of, if you like the image of standing behind the CEO and pushing him to go even further down the road that he had already set on.
All right, what an image. Will Kennedy, Bloomberg Senior Executive Editor for Energy and Commodities. We thank you as we look ahead to those BP earnings at the top of the hour. Now, I mentioned the FT interview with Catherine Mann, the Bank of England's former arch hawk turned arch dove at Thursday's meeting. She voted to cut rates by 50 basis points last week, along with Swati Dhingra, who we expected might have gone for a jumbo move. But the surprise swing from Mann really triggered the market. A dovish reaction initially before they went on to focus on the inflation forecast and the increase in the inflation forecast, where the BOE now sees it still only returning to target in 2028. But interesting in this interview to get more insight into Mann's reasoning. So she sees the jobs market and demand conditions weaker than before. She says that means companies will struggle to raise prices as consumers pull back on spending. But she says that this is a one-off move rather than the start of a string of rate reductions. And interestingly, whereas Governor Andrew Bailey said that 8-2 vote split was not a communication signal, Mann says that it was for her. She says a larger move is a superior communication device to, quote, cut through the noise. So disagreeing about more than the rate path, it seems, on the Monetary Policy Committee. Now, to some breaking news from Novartis crossing the terminal this morning. And this is that Novartis is looking to buy Anthos Therapeutics for $925 million up front. So Novartis bolstering this late-stage cardiovascular pipeline with an agreement to buy Anthos Therapeutics. This is according to a statement that has just dropped with potential additional payments of up to $2.15 billion, but that's dependent on achievement of specified regulatory and sales milestones. And we are told that this transaction is expected to close in the first half of 2025. So we shall keep across that story for you. But plenty more coming up on the programme. Do stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. To one of our top interviews now, the French Finance Minister Eric Lombard says that France is going to keep its digital tax that hits major US tech firms, despite past threats of tariff retaliation from the US President Donald Trump. Speaking exclusively to Bloomberg's Tom McKenzie, Lombard told us more about Europe's stance on trade talks with Washington.
President Trump is a deal maker, so Europe will answer as strongly as the position of the United States, and either we'll have our own tariffs or we negotiate. We'll see according to the reaction of the United States to the answer we are preparing.
Europe already has reciprocal tariffs in place on US steel from the previous trade conflict. They are now frozen. They could be unfrozen in March. Is that an easy response for Europe to go to? You unfreeze those reciprocal tariffs and let them snap back in?
I will not give the answer before we have the official answer from Europe.
How much pain is Europe prepared to inflict on the US?
We are prepared to do whatever is necessary in order to be balanced. We have the same tools, we have the same weapons if need be, and we will use them very calmly.
And we can assume that the European Commission has a list of targets that they would enact tariffs on.
We are ready because we knew that was coming, so we are ready.
Okay. President Trump has asked for a probe into taxes globally. And one thinks of the digital taxes that France has that overwhelmingly impact US tech companies and bring in, 500 to 700 million euros a year. Would you and France consider dropping that digital tax in order to avoid a trade war?
I'm not sure that the tax issue is related to the trade war, but we have put together a tax actually on the digital companies that we are maintaining because that is the law of France, and we'll see whether that comes into another type of conflict with the United States. I hope it will not, because tax is a question of sovereignty, and every country has its own tax system. We have our own, and we will stick to that.
So that was the French Finance Minister Eric Lombard speaking exclusively to our colleague Tom McKenzie. And we'll have full continuing coverage of the AI Action Summit in Paris. Heads of state and government will be the focus today, and we'll be speaking to the leaders from the Signal Foundation and French-American AI firm Hugging Face later on this morning. Now, to some other top stories making news. Bloomberg has learned that Donald Trump's envoy for Ukraine and Russia plans to present the US president options in the coming weeks to end the war. The envoy, retired General Keith Kellogg, will gather input from officials at the Munich Security Conference in Germany starting on Friday. And the options set the stage for Donald Trump to hold direct negotiations with Presidents Putin and Zelensky. Elsewhere, Europe is facing the threat of another energy crisis after natural gas prices soared to the highest in 2 years. Storage sites are less than half full, the lowest level since 2022. Colder weather and the loss of Russian gas transit via Ukraine have forced countries to tap into their fuel reserves. Those are some of our top stories this morning, but coming up on the programme, gold has reached a record before pairing gains as President Trump's latest tariffs on US steel and aluminium imports add to uncertainty in the global markets. We'll bring you all the latest on the markets next, so do stay with us. This is Bloomberg. A very good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Asian stocks and US futures fall after Donald Trump slaps a 25% tariff on all steel and aluminium imports. The US president also warns of levies on chips and cars. OpenAI says no thanks to Elon Musk, rebuffing a $97 billion offer for the company. We'll have reaction from the AI Action Summit in Paris, where the world's top AI players are gathering. Plus, hypercharged hearings for the Fed chair. Jay Powell heads to Capitol Hill to face questions on Donald Trump's policies on tariffs, banking regulation, diversity, and more. Well, a very good morning. Welcome to Tuesday. And if we check in on these markets, traders are really continuing to mull whether Trump's tariff threats are merely a negotiating ploy. He has signed this executive order on 25% steel and aluminium tariffs, so it seems the threat is translating into action. So now we're going to wait for the Fed Chair, Jay Powell, to tell us how he's processing the tariff threat to inflation, and he'll be testifying in Congress later on. So having taken it all in their stride yesterday, the risk-off mood is spreading through these markets. Futures pointing lower on both sides of the pond, though significantly more, I should say, stateside. But if we flip the board over to the cross-asset picture, Japan notably is on holiday, so cash trade in treasuries is closed. But the hottest major commodity of the moment is gold, inching towards the $3,000 mark. And we will get more into whether that could pause, if only for a short period, and what could cause that in just a moment. But Brent trading at $76 a barrel, boosted by that Bloomberg scoop that Elliott has taken a significant stake in BP. Cable there at $1.23. We've had that BOE commentary from the arch hawk turned arch dove on the Monetary Policy Committee, Catherine Mann, and we'll be hearing more from her at 8:45 a.m. London time. And you've got Bitcoin there trading at $98,275. But let's get more into the yellow metal. Gold, as I say, rallying in a sign of investor caution after President Trump proposed 25% tariffs on all US imports of steel and aluminium. We can get more now from Bloomberg's Valerie Teitel. Val, what's been the main driver here? We know that gold is the safe haven, but what's taken it all the way to nearly $3,000?
Look, Lizzie, I just want to say it's really not clear why gold has been outperforming so far this year. There has many factors at play. Unclear which one is the main one. One of them, which you mentioned, would be a safe haven demand from the trade war. But we've not necessarily seen a risk-off mood in the equity market that would perhaps push people into buying gold. We've also seen other macro drivers at play that are supportive, though, such as the dollar softening and real yields declining. That is normally a time where gold does outperform on a macro scale. The other thing we also have to mention is that China has been buying gold. They've been going away from their treasury holdings into diversifying the holdings of their in their central bank assets, one of them including going into gold. That was actually something they did very strongly during the previous Trump administration. So maybe there's some speculation that China would ramp up their buying of gold under the second Trump administration. But again, it's quite unclear, why it's outperformed so much. There has been some speculation that the U.S. government could look to revalue their gold holdings, which has been talked about a lot within the macro space. The current holdings are marked on the U.S. government's balance sheet at $42 when they came off the gold standard nearly 70 years ago. Perhaps if they mark their gold to market closer to $3,000, generate some income, that could be something that could spark further inflows into gold. But then that's very unclear why remarking gold would essentially drive the price higher. So very confusing on why this is outperforming, but it's really catching the market's eye at the moment.
OK, really interesting. But you mentioned China there. Gold stocks also on the move from London to New York, Falters. Why is that?
This is very interesting. We've actually seen the steepest drop in holdings here in London as they move to New York that we've ever seen on record. Some of that is because people might be preempting some sort of universal tariff, where if they did eventually wanted to move their gold holdings to the U.S., they would have to comply with the tariff rules if there were a universal tariff. So we have seen a big surge into COMEX vaults. Those are gold stocks in New York. They've been leaving London and been leaving Switzerland, perhaps a preemptive move to try to get around any further announcement of universal tariffs.
OK, Bloomberg's Valerie Teitel with a deeper look into what's happening to gold. $2,921 an ounce is where we trade at the moment. But let's get over to China now, where China's 10% additional tariff on cars imported from the US is set to hit automakers, including General Motors and Ford. The extra tariff brings the total levy to 25%. But the situation could be fluid as Donald Trump plans to hold a call with President Xi Jinping out of China to discuss that trade situation. Katrina Nicholas, who leads Bloomberg's transport coverage over in Asia, joins me now for more. Katrina, which automakers are going to be the most impacted by this and how?
I think, as you said, the big US automakers like GM and Ford, they're the ones that really stand to lose the most in this. And according to customs data that comes from China, international manufacturers shipped about $3.1 billion worth of these vehicles with these larger engines from the US to China just last year alone. In particular, I think will be affected is GM. So in a bid to appeal to wealthy Chinese buyers, GM just recently launched a premium import service that it called Durant Guild, and it's offering vehicles such as the GMC Yukon and the Chevrolet Tahoe Sport utility vehicle. Both of these cars are powered by engines that are 3 litres or more, and this comes at a time consumers in China are already feeling the pinch. So making the cost of these cars even more expensive is just going to make them that much more unpalatable. And I think the other important thing to realise here for the big automakers like GM and Ford is that in China, they're also competing with a raft of really strong Chinese players like BYD and Geely.
And the other big news, of course, is from BYD. What's getting investors so excited about its latest offering?
So they held a very highly anticipated event on Monday night in Shenzhen. And at that event, BYD said it's going to make its God's Eye driver assistance system standard across vehicles priced from about $14,000 and up, including one of its most popular lower end models, the Seagull hatchback. So whereas before you've really seen BYD compete on sticker price, being very aggressive both within China and in the international markets in which it operates, now Chairman Wang Jiangfu is pushing forward into the world of autonomous driving and making that BYD's next accessible frontier. And in fact, the fact that it's going to be added for this, no extra cost pretty much across the entire spectrum of BYD vehicles. And I think that is what is quite significant. And that's certainly what is exciting investors. They sent shares in BYD to an all-time record today in Hong Kong.
OK, investor reaction positive, analyst reaction positive. Katrina Nicholas, we thank you for walking us through that latest update from BYD. Now let's get to some of the other stories making news this morning. President Trump is threatening to cut off foreign aid to Jordan and Egypt if they don't agree to take Palestinian refugees from Gaza. He earlier said that Palestinians would not have the right to return under his plan to take ownership of the territory. Trump has also told Israel to call off its ceasefire with Hamas unless Israeli hostages are freed by midday on Sunday. In other news out of the White House, President Trump has refused to endorse J.D. Vance as his successor, saying it's too early to make that call. Trump's comments to Fox News came as the vice president visited Europe, attending the AI summit in Paris and preparing to represent the U.S. over at the Munich Security Conference.
Right now, do you view Vice President J.D. Vance as your successor, the Republican nominee in 2028?
No, but he's very capable. I mean, I don't think that I think you have a lot of very capable people. So far, I think he's doing a fantastic job. It's too early. We're just starting.
So those are the latest lines out of the White House. But let's get back to the earnings picture. Unicredit reporting fourth quarter profit ahead of analyst estimates. The beat has allowed the bank to boost shareholder returns, even as Chief Executive Andrea Orcel pursues takeovers in Italy and Germany. We can get more now with Lento Tang, bank analyst at Bloomberg Intelligence. Lento, glad I can pass these lines with you now. We've, of course, got this focus on balancing deal-making and rewarding shareholders. I wonder if you reckon that Orcel has managed to strike it when he's got all of this M&A on the horizon.
Yeah, I mean, it's a very interesting time for Italian banks because of all the deals going on. So all of the banks are trying to put their best foot forward. Unicredit's performance is definitely very strong this quarter. I think what is most striking for me is the net interest income. The NII beat consensus by 6%, where we're in a falling rate environment. So that is just shows very good deposit cost control and deposit hedging as well.
Yeah, interesting to see Unicredit saying that the potential M&A with BPM, and Commerzbank is not going to overlap. We also get Banco BPM's earnings later today. What are you looking out for? What are investors looking out for?
For Banco BPM, I think for their defense, first of all, is capital returns. They need to prove that they can return more value to shareholders than accepting the Unicredit deal. Banco BPM is also one of the banks that are hit harder for the net interest income. So consensus is saying 9% drop in 2025. So they need to prove that they have more resilient net interest income, whereas they can also boost fees.
OK. Lento Tang, our Bloomberg Intelligence Bank analyst, we thank you for that analysis of those Unicredit earnings. And we're going to be speaking to Unicredit's CEO, Andrea Orcel, tomorrow at 9 a.m. London time. So you do not want to miss that interview. Elsewhere this morning, in terms of what to watch out for today, 12:15 p.m. London time, Andrew Bailey, the Governor of the Bank of England, will be speaking, giving us a bit more insight into that decision on Thursday and the path ahead, as well as the forecasts updated as they were on Thursday. Then at 3 p.m. UK time, we'll hear from the Fed Chair, Jay Powell, testifying in a marathon two-day testimony to the Senate Banking Committee. That will begin. And then in terms of earnings, we, as we just said, have Banco BPM coming up, also Coca-Cola and AIG. So plenty on the docket for you to watch out for today. But coming up on Daybreak Europe, Elon Musk sets his sights on OpenAI, bidding for the company that he co-founded. There was a no thank you from Sam Altman, but we'll have more on the response from the OpenAI CEO next, as well as more from the AI Action Summit over in Paris. So do stay with us. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Welcome back to Bloomberg Daybreak Europe. It is 6:45 a.m. here in London, and we are waiting for results from Kering, the luxury group, of course, the owner of Gucci, really trying to project stability right now after this series of guidance cuts, management overhauls as well. The new CEO, Stefano Cantino, change at the top there. Also the surprise departure of creative director Sabato De Sarno as well. The question for investors really is whether management has a clear vision for Gucci, its flagship brand, and those results dropping on the terminal right now. So for the fourth quarter, we have revenue down 24%. The estimate was for a drop of 22%, so worse than expected. We have revenue. They say that they saw slight sales improvement between the third and fourth quarters, but EBITDA coming in at 4.67 billion euros, the estimate being for 4.16 billion euros. So a slight beat there. And Kering saying that it has plans for more deals with property funds to cut its debt. So sales tumbling as this turnaround fails to take shape over at Gucci. Can they improve things now that they have made these changes at the top? The change in terms of the creative director, at least, one of the first major decisions by the new CEO, Stefano Cantino, who took over that role in early January. So those results from Kering dropping, shares down 40.71% over the past year. But let's stay with the corporate and turn to tech, because as we mentioned earlier, the OpenAI CEO Sam Altman has rebuffed a $97 billion bid from a group of investors led by Elon Musk, who of course co-founded the company. They want to buy the non-profit that controls the ChatGPT creator. Now, the bid is seen as a move to complicate OpenAI's transition from a non-profit to a for-profit entity. We can get more now from Tom McKenzie, our anchor, of course, who's on the ground at the AI Action Summit over in Paris. Good morning, Tom. The fact that Altman turned this down, no thank you, is what he said. Is that a surprise?
Not really, no, because these two, Musk and Sam Altman, have been in a war, essentially, a feud, certainly, over the direction of OpenAI. Don't forget that going back to 2015, the founding of OpenAI, Elon Musk was one of the first investors. This was a plan they put together. Sam Altman and Elon Musk worked very closely together to build out OpenAI in the early stages. But since then, in recent years, they have diverged dramatically. And that's because Elon Musk says this organization and startup under Sam Altman has moved so far away from its mission of providing safety-focused AI, open to the public and a non-profit. Now, OpenAI pushes back on that characterization, of course. They're also in a legal battle, the two as well. So this complicates, at the very least, it complicates that effort by OpenAI to shift from non-profit to a multi-billion-dollar profitable organization at a time where they're trying to raise funds and they're looking at a valuation of around $300 billion US. We don't know how seriously to take Musk's bid, but certainly, according to the reporting from the Wall Street Journal, he has lined up some serious investors and serious backers. But one takeaway we can take from this is another step up in that feud between Elon Musk and Sam Altman, and certainly will put a ridge in the works in terms of the complexity of shifting, again, from a non-profit to a profitable organization for OpenAI that, of course, is backed by Microsoft to the tune of about $13 billion and could be getting about $25 billion in investments from SoftBank as well. So it's certainly a wrinkle for OpenAI and a step up in terms of the feud between these two tech moguls.
OK, so that'll be one of the themes over at the AI Action Summit. Of course, we always knew that DeepSeek was going to be another theme hanging over it too. The Google DeepMind boss saying that some of DeepSeek's claims about the relatively low cost of training its AI model are exaggerated. Hassabis, along with leading industry figures, talking to Bloomberg over there in Paris about the impact of DeepSeek on the AI industry. Take a listen.
It's a very impressive model, a very impressive piece of work. I think the team is probably the best team that I've seen come out of China. So that said, I think a lot of the claims are exaggerated and a little bit misleading.
A lot of the key things from DeepSeek are reducing the cost of innovation, but also raising this question of data control.
If you have potentially more constrained resources, you can make a better job than if you have immense resources and stop thinking about what to do efficiently.
There is a global competition right now between whether the world's going to be built on small d, democratic AI rails, or authoritarian, autocratic AI rails. And that's the big takeaway from this.
I think there's been a lot of excitement, but we'll have to see if it materializes.
So we always knew it was going to be, Tom, DeepSeek, a big talking point over there in Paris.
It has been one of the key talking points, of course, amongst executives here at the Paris AI Action Summit. I think the messaging and the response from Demis Hassabis, the CEO of Google DeepMind, was the most and clearest, almost enunciation of what DeepSeek had been saying. He said they were misleading, slightly misleading, and exaggerated their claims around the cost that they used and spent to train their model. He basically said that during the final phase of training, that was what is accounted for DeepSeek. He says there's a whole other process around the training of these models that's much more expensive, and that doesn't seem to be accounted for. He also said it doesn't seem to be a silver bullet, the technology that DeepSeek could come up with, and he also claimed that Gemini, Google DeepMind's own model, is actually more efficient than DeepSeek. But absolutely, this has been a key question for executives on the ground here in Paris.
And as all the executives tussle between each other and decide how they're going to deal with DeepSeek, of course, there is the role of government as well. And the French Finance Minister, Eric Lombard, has said that France is going to keep a digital tax that hits major US tech firms, despite the past threats of tariff retaliation from President Trump. You were talking to him, Tom. What else did he tell you?
Yeah, so we focused on the tariff response and we focused on that digital services tax. France, one of the first countries to put this in place back in 2019. It's about 3% on the revenues of big tech companies, mostly, of course, inevitably US tech companies. It raises around 700 million euros for French coffers and the French government. And the question has been, given that Trump has come into office again and has ordered a review of international taxation policies that could potentially target US companies, the question has been, would France, and this is my question to the French Finance Minister, would France consider removing that digital tax if it means avoiding a trade war with Trump? We know Trump does not like this. He thinks it unfairly targets technology companies in the US. He said, the French Finance Minister, that no, this is not for negotiation. This is our law. This is our sovereign tax law. We're not changing that. On tariffs, he says, we have weapons at our disposal. Take a listen to the French Finance Minister.
We are prepared to do whatever is necessary in order to be balanced. We have the same tools, we have the same weapons if need be, and we will use them very calmly. It is not a negotiating tool. We have it already in place. We will have the negotiation and the discussion with the US administration.
So France's Finance Minister Eric Lombard speaking to me there, saying that France, the European Union, is prepared to hit back to these Trump tariffs. Of course, he says he'd prefer a negotiated deal. Lizzie.
OK, Tom McKenzie over at the AI Action Summit in Paris. We thank you for those fantastic interviews. There'll be plenty more of them throughout the day and plenty more on Daybreak Europe. So do stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, just in our last few minutes here, let me bring you the question that really is on traders' minds at the moment. What is bark and what is bite when it comes to Donald Trump's tariff threats? His 25% tariffs on steel and aluminium have had the executive order issued, so it does seem that threat is translating into action. And this is really what's on investors' minds. Tariffs, topic du jour, as you can see from AI analysis of the mentions of tariffs in S&P 500 company transcripts rocketing up, as you can see, over the past few months. But if we flip the board over, you can see partly the market impact on gold. Gold inching towards $3,000 an ounce. But it's not all down to tariffs. It is partly, though, this flight to safety. But if we flip the board again, it's not just tariffs on your minds, it's also Powell's testimony. He will be asked about tariffs, undoubtedly, and the impact on inflation, and inflation very much on the FOMC's minds as well. That does it for Daybreak. The opening trade's up next. This is Bloomberg.